Um, Good morning, everyone. My name is Shanshan Yang. Today, I will introduce XBRL or Extensible Business Reporting Language, a standardized machine-readable format revolutionizing how financial data is reported, accessed, and analyzed. We will see how it works, why it matters, and how AI, especially large language models, plays a role. Here is our roadmap. This talk will cover three main areas. We will start with introducing XBRL and why it matters, different reporting formats and their structures, and why XBRL relates to LMs. Then we will address XBRL challenges and how LMs can potentially play a role. And finally, the specific application scenarios and conclusion. Let's start with an overview of XBRL and why it's so crucial. XBRL stands for Extensible Business Reporting Language. It's machine-readable, so computers can efficiently extract, compare, and analyze data. Taxonomies define specific financial concepts like revenues or costs, ensuring standardization and consistency across companies and time periods. XBRL is also a regulatory requirement. Agencies like the SEC mandate it, driving improved transparency, reduced fraud, and lower reporting costs. Moreover, it speeds up financial information sharing. Investors and analysts can quickly access reliable data, which boosts market efficiency and narrow information gap. Different reporting formats. XBRL can appear in different formats. XBRL XML is the original XML-based approach, known for strong validation. Inline XBRL or iXBRL embeds XBRL tags within an HTML report document, which is helpful when you want both human-readable and machine-readable outputs in one file. XBRL JSON is simpler for developers who prefer JSON to XML, and it is often used for quick publishing of datasets. XBRL CSV is ideal for large numeric datasets using CSV plus a separate JSON meta file. And then both the XBRL XML and the iXBRL files are accessible in the SEC EDJR database. While the certified XBRL software can auto-convert between iXBRL and XBRL XML from or to XBRL JSON and the CSV, so they can double convert to each other. Yeah, like bidirectional converting. Yeah, and then each format addresses different needs, but still relies on the same XBRL taxonomy. XBRL XML is the original format. It typically includes 5 link-based files: calculation, definition, label, presentation, and instance, plus 1 XSD schema. Each part plays a role. Instance documents host the actual figures. Calculation and presentation link bases define how data sums up and appears. Definition and label link bases add clarity and on concept meaning. And XSD sets the structural rules. This robust structure supports detailed validation, which is why many regulatory bodies still rely on XBRL XML format. And then for the details, you can see on the right hand side, the image on the right hand side. And then the raw XBRL XML files can be accessed in each filing detail page, like shown in the left hand side in the green box. And then a simplified result of reading XBRL files with a certified software like Ariel is similar to a table shown on the right. Here you can find details of each item. For example, net income, you can see the underlying definition, standardized tag, and other detailed information. The actual XBRL XML files contain more details than the table shown here. Inline XBRL embeds XBRL tags within the HTML report. You can gain access to the features via SEC Web XBRL Viewer, as shown on the right-hand side, or locally installing a certified software add-in. As you can see, it is a normal financial report, but embedded tags make it connect with each item's metadata in XBRL. And this has become popular for financial filings because it serves both readers and automated systems. The SEC platform accepts XBRL, allowing filers to maintain a user-friendly layout while delivering the structured tagging to regulators and data consumers. Here's what happens when you click on the data item in the iXBRL filing. A pop-up shows the XBRL tag, the reporting period, the numeric value, among other details. This clarity is exactly what makes XBRL so powerful. XBRL JSON is a JSON-based representation of the same XBRL data. Developers prefer JSON for web applications because it is lightweight and easy to parse. Certified softwares can automatically convert XBRL or XBRL XML into XBRL JSON, making it simpler to distribute structured datasets. This format is especially handy for public data releases or data-driven websites that integrate financial disclosures directly into interactive dashboards. XBRL CSV splits data into a simple CSV file and a JSON metadata file. The CSV file organizes facts into rows and columns as the table shows, while the metadata defines which taxonomy concepts these columns represent, as shown on the right-hand side. This structure suits large volumes of numeric data where repeating patterns occur, like thousands of line items. Because CSV is lightweight, it reduces file size and speeds up processing, which is crucial for high throughput or bulk reporting scenarios. Even with advanced large language models, XBRL stays essential. First, LLMs thrive on structured data. XBRL provides consistent tags that reduce ambiguity and hence can serve as reliable datasets for LLMs. Second, many regulatory mandates ensures XBRL usage, so it is a steady data stream. Also, LLMs that read text benefit from connecting footnotes, narratives, and the precise numbers in XBRL text, which boost accuracy in analysis. Finally, combining XBRL data with large language models' natural language abilities can introduce new automation opportunities. XBRL offers big benefits, but we face challenges, and the LMs have the potential to resolve them. We have three main challenges. First, data quality and validation. Data Quality Committee or DQC and DQC rules taxonomy define validation rules to detect issues, but coverage is partial. Regulators still review filings manually. Second, manual workload. Tasks like tagging and validation need experts in accounting and XBRL, which is time-consuming and costly. Third, data complexity. XBRL defines many relationships and references. Vendors aggregate data, but stakeholders like investors and analysts consume the publicly data at a very high cost. And different regions have very unique accounting rules, which complicates the compliance process. These obstacles slow data flows and increase compliance burdens. Large language models have the potential role to solve the problem, like support DQC rules by creating or refining validation checks. Second, automate repetitive tasks like suggesting correct text based on report text, reducing human error. Third, LMs can assist regulators by highlighting anomalies that exist DQC's current scope. And finally, LMs can extract and analyze data across complex tables for timely decisions. These rules help reduce manual tasks and error rates. As a result, experts spend less time on mechanical work and more time on strategic tasks like interpretation or policy. Application scenarios. We will cover three main scenarios: automating XBRL filing generation, accelerating SEC validation, and automating financial analysis. First, converting financial statements into XBRL still involves a lot of manual tagging. An XLM trained on taxonomies and the prior filings could suggest accurate tags, thereby speeding up the process and reducing the chance of human error. This would lead to faster, more consistent, and lower cost filings. Here is a high-level workflow. You can start with a traditional financial report in text, HTML, PDF, and so on. A system assisted by an LM processes the report and suggests XBRL tags. We then use the tools like a real software to validate and generate the final XML documents. This closes up the loop between raw accounting data and the structured XBRL output. The SEC review of filings can take weeks or months, especially if there are complex accounting treatments involved. An LM could analyze filings for compliance issues, highlight discrepancies, and even propose resolutions, thus supporting regulators and filers in producing accurate submissions far more quickly. Finally, once we have structured data, LMs can help build advanced financial models. For example, a discounted cash flow or DQC model can be generated by pulling relevant line items from XBRL, adding assumptions, and running the calculations automatically. This makes high-level financial analysis accessible to non-experts while still maintaining professional quality. In summary, XBRL improves financial data by making it standardized, transparent, and machine-readable. Challenges remain around data quality, manual tasks, and complexity. But LMs can reduce these challenges by offering automated tagging, refined validation, and integrated analysis. This synergy accelerates compliance checks, lower errors, and empowers deeper insights. As more organizations adopt XBRL and LMs, improve These tools will reshape financial reporting. We can then see faster, more accurate, and more transparent disclosures. Thank you. Any questions?